Awesome. Shehan, can I ask you one question that we
Yeah,
got?
yeah, happy to answer. Yeah.
Awesome. So we got a question around whether this would be considered a way to be more tax efficient or pay less taxes. And I'd love your clarity on some of the guidance here. But let's say, like I made a good amount of money off of Ethereum in just a couple months. So kind of a short term activity. Can I move that Ethereum to USDC for 1 year? And so then that would be considered long term gains, and then I would pay less taxes.
Sorry, Nishita, you were breaking up. Could you repeat the question?
Yeah, definitely. So we had a user who asked basically like they made a good amount of money off of Ethereum in just a couple months. So it was kind of a short term amount. Can they move that to USDC, so a stable coin, for 1 year so that would actually be considered long term and you would pay less taxes?
Not really, because basically a taxable event happens when you sell that Ethereum into USDC. Because you're selling that Ethereum into USDC after holding that Ethereum for less than 12 months, you would have to end up paying taxes on as short-term capital gains.
Gotcha. So basically, when you sell off that Ethereum, that would be considered the disposition. And so moving it to a different token would not help you.
Correct. And to trigger like long-term capital gains, you have to hold that Ethereum for 12 months, and then you can sell it, and then whatever that gain will be considered long-term.
Got it. Does that also apply to tax loss harvesting? Any tax loss harvesting I'm doing, if I, let's say, sell it and then immediately buy it, I would still have to pay the gain on the initial disposition.
Well, tax loss harvesting is applicable when you're selling something at a loss. So if you're selling something at a loss, you can buy back the same coin without waiting for 30 days. And that loss can help you like reduce your overall tax bill.
Got it. Awesome. And actually, on this note of kind of tax efficiency, we have a question kind of in the chat or the thread for this space around kind of the strategies for kind of Roth IRAs or just tax advantage accounts. So, what options do people have in crypto to be able to contribute to IRAs or retirement accounts, or how can we be potentially more tax efficient in our crypto transactions?
Yeah, I mean, there's so many ways, but when it comes to like kind of planning for your retirement, kind of buying crypto inside a Roth IRA is a great strategy. Uh, After this whole spot Bitcoin ETF thing, like you can kind of easily do that. But if you don't like to hold the spot ETF in your Roth IRA, you can set up like a self-directed Roth IRA and actually hold like Bitcoin, like not the ETFs, the actual Bitcoin as well. And those are pretty much like the gains will be tax free if you set things up correctly, and if it is Roth.
Gotcha. So, are there any other ways? Is there an easy way for me to hold like the actual token in an IRA?
The actual not really, unless it's a self-directed regular IRA or a Roth IRA. Basically, like you had to kind of work with a custodian. Like you can just Google like self-directed IRA, and you can set up one, and through those vehicles, then you can own like direct crypto. But you cannot today hold direct Bitcoin or any other cryptocurrency in like a 401k or like a regular IRA or like a Roth IRA offered by your employer. You have to set up what's called a self-directed Roth or a regular IRA if you want to hold crypto directly in that fund.
Gotcha. Super helpful. Thank you. And then if anyone else has more questions about sort of this, how we think about some of these tax advantage accounts and how they relate to crypto taxes, feel free to add them in the comment thread and we can go through some of those. Um, we do get a lot of questions, especially this year, around some of the bankrupt or defunct exchanges and how people should go about accounting for them. So maybe first, Shehan, what options do people have when it comes to those exchanges that have gone down or they've lost their crypto? as a result of the platform itself not operating anymore.
Yeah, I think the good news is that most of the platforms have already distributed the funds back to their users or are in the process of distributing the funds. So that, which is great. In CoinTracker blog, like if you go to cointracker.com/blog, we actually wrote like an in-depth guide on like how to handle these, payouts from a tax point of view, and also how to reflect this on CoinTracker as well. Now, generally speaking, these type of like distributions do not trigger any taxable event. Again, generally speaking, what you usually do is whatever the new coins that you're receiving as a result of the bankruptcy payments, those new coins inherit the cost basis and the date purchased of your original coins that you held in the platform at the time of the bankruptcy. So basically, you had to transfer your cost base and date purchase to those new coins, and kind of work your taxes from there on. Again, this is a general rule. There could be situations where this could trigger a taxable event as well, and in our blog, like that's explained in details. So yeah, hopefully that answers. I know this is like a question that I see on social media all the time. So again, please use like a crypto tax software tool, read the blog, and if you're still confused, I would highly encourage you to work with the CPA to get the tax treatment right on these bankruptcy payouts.
Yeah, I would also, so speaking more from the CoinTracker product side, I would definitely, one, like consult with your tax advisor. That's really important for some of these situations. And two, like what Shehan was mentioning, if you ever do need to adjust the cost basis of assets you received because of the bankruptcy of an exchange, we do have tools on CoinTracker that let you either mark kind of the lost or stolen assets when they originally got lost, or potentially have set up some custom cost bases depending on what you remember or have been tracking for those exchanges. So I know it does suck when an exchange does go bankrupt or some of these platforms go down, but there are opportunities for you to kind of deal with it from a tax perspective. Awesome. So we have a couple other, maybe a little bit more just kind of general questions around taxes. I know a lot of people in crypto are kind of new to how to deal with their crypto taxes. This might be the first year you're filing your crypto taxes. And so maybe a simpler question, but curious, Shehan, if you can walk through this. It's just like, how do I actually determine my cost basis, especially when there are like potentially transfers I'm doing across my different wallets?
Yeah, so cost basis, okay, what does that mean? In simple terms, cost basis is how much you paid for a coin. And why does it matter? That matters a lot because when you have to calculate your gain or loss, when you sell that coin, that cost basis is needed for that calculation. And in the stock space, if you're dealing with like stocks in a brokerage like Robinhood or Charles Schwab, when you trade stocks, all of your gains and losses and this cost basis, all of them are like maintained and tracked by the broker. So at the end of the year, like you log into the broker, go to the tax center, you download like this tax form called 1099B. It has like everything that you need. Now in the crypto space, this does not happen. The reason is there are multiple reasons. I think the main reason is self-custody. Whenever you transfer your coins from, let's say, your ledger to Coinbase and sell that coin in Coinbase, Coinbase only knows the sales price of that coin. Coinbase does not know how much you paid for that coin because you didn't purchase that coin inside Coinbase. So Coinbase would likely issue you a tax form with the sales price and with zero cost basis. So this is why, like, if you have self-custodial wallets, so if you're dealing with exchanges that do not do this reporting correctly, you have to use a tool like CoinTracker to connect all the sources, I mean all the wallets and exchanges, track your cost basis, so that way when you sell something, you know the sales price, you know exactly which unit of coin that you sold and the cost basis, and that way you can calculate the right amount of gain or loss, so you don't end up overpaying taxes or underpaying taxes. So yeah, hope that answer helps the user.
Awesome. And actually, we have an answer, or we have a question related to this and also the previous things that we were talking about related to bankrupt exchanges. So it looks like the question is, what's the best way to pull cost basis from places that are defunct, like Cryptopia, or there are others that have stopped allowing US users? So this can be a tricky situation. So from the product side, what I can tell you is if you had already added that exchange or just that platform to a software like CoinTracker, we might still be able to use our API connections to pull your reports. So for example, we've had users in the past who had added FTX. Luckily, we had synced their wallets right before the platform did go down. And so we still had their cost basis and all their transactions. Now, in the event that you are not in that situation and you don't actually have that already added, there's a couple options. And I'd be curious also, Shehan, to hear from you, like what could be the assumptions you could make if you can't pursue these options. But the first option maybe could be reaching out to your exchange for a CSV report. If they're fully defunct and they're just not accepting any sort of reach outs or support requests, and that may not be an option, but that would be the first thing I would try, is like potentially trying to get a CSV export of your transactions. And if not, Shehan, is there any way to like sort of estimate, or like how would you go about potentially grabbing cost basis for things that were on these platforms that are no longer operating?
Yeah. So yeah, first of all, I guess try reaching out to the exchange and see if there's any record that you can obtain, as Nishita mentioned. If not, see if you have any like screenshots or any type of documentations or email confirmation that you can use to substantiate the cost basis. Meaning, like IRS wants you to have some type of record. To substantiate, to prove that, okay, you purchased this coin at this specific price and therefore that's the cost basis. So look at your email history and all those things. Now, if all of those things fail, according to the IRS rules, if you cannot prove your cost basis, then your cost basis becomes zero. I know it's very bad for you as a user, but unfortunately that's the case. Now, this is the reason why actually you should consider using like a crypto tax tool. Not after the fact, but also throughout the year. Because if you have been kind of syncing all the transactions throughout the year to a crypto tax software tool like CoinTracker, you won't have this issue. So going forward, I would encourage you to kind of, proactively, download the CSVs, take some screenshots, and also like, use a crypto tax software tool throughout the year, not on April 15th, throughout the year. So that way you're carrying this history. And if something happens to the exchange, you're fine. You have the full record inside your crypto tax software.
Yeah, that is, I would just plus 100 that last point. You can basically add your wallets or exchanges to CoinTracker at any point, or any sort of other crypto tax software you might be using. You can literally add it at any point in the year. And what we'll do is we'll sync those wallets every single day. And so you'll have kind of updated transaction histories throughout the year. And that can be really helpful. It's obviously we don't expect or want these platforms to go down, but in the event that they do, like for example, I myself had an FTX US account and that went down, but I had it on CoinTracker, and luckily my transactions are still there. And so it can just help prevent some of those situations. And it can help prevent some of the anxiety when something bad does happen. And secondly, also like a side benefit is you can also like track your portfolio and other things on CoinTracker if you are doing that year round. Awesome. We do have one question, Shehan, around transfers. So if I transfer assets from one, like my Coinbase exchange, to a self-custody wallet, should I be preparing for tax? I don't know, just preparing for crypto taxes?
Yes. So first of all, the good news is that when you transfer your crypto from Coinbase exchange to the Coinbase wallet, that is not a taxable event, which is good. However, you need to use a crypto tax software tool to maintain the cost basis, because what will happen is in, 2 years from today, you will transfer back that coin from the wallet to Coinbase exchange to sell it. And when that happens, Coinbase will likely issue a tax form, and they will also report that to the IRS, but they will not know the cost basis of the coin that you're selling. So unless you keep good records in a crypto tax software, you will most likely overpay taxes. So to answer your question, the transfers are non-taxable. That's the good news. But whenever you transfer something out of the exchange, you have to keep good detailed records, because that information is essential for you to figure out the right capital gains or loss when you later sell that coin in the future.
Absolutely. And then one of the only other things I would add is sometimes when you're doing transfers, you may also pay a fee, like a network or blockchain fee, gas fee, it's called in some ecosystems, around actually doing that transfer. And in that case, there are actually rules and ways that fees affect your cost basis, and it may lower your or increase your cost basis, which can be good for you. So just in general, as soon as you've done a transfer to, let's say, another exchange or another self-custody wallet, or like some wallet you're using on chain, I would recommend starting to, like, that in and of itself might be the time to start tracking this stuff on a tool like CoinTracker. It will just help you long term. And like Shehan said, your cost basis should carry over as you're doing this transfer. And if you don't do that, you might end up just paying more in taxes later, which is obviously not a great thing. Um, awesome. We have some questions. You mentioned, Shehan, like the 1099s, or you mentioned basically like Coinbase may issue some tax forms. So we had one question around whether these forms that Coinbase or other exchanges issue, are they only for losses or gains above 600? Like, there is some confusion around the 600 number. Could you help clarify that?
Yeah, there's a lot of confusion here. Okay, so major exchanges like Coinbase and Gemini, they issue a form called Form 1099 MISC, miscellaneous, only if you have over $600 worth of staking rewards or any other type of rewards. So if you earn more than 600, you're going to get this form. If you do not earn more than 600, you're not going to get this form. Now, that said, you're still required to file your taxes and report that income. And again, if you don't receive a form, if you go to the Coinbase's tax center, you can actually see how much staking reward that you earn if it's less than 600. So that's that. Another form you might see is the Form 1099B. If you're using kind of like a non-crypto native exchange like Robinhood, maybe Uphold, maybe PayPal, you might see a Form 1099B, and that form will report your capital gains and capital losses related to crypto sales and trades. So those are the two forms that you can expect: the Form 1099 miscellaneous and the Form 1099B. But the 1099Bs are very rare in this space. Again, you gotta have to kind of figure out your capital gains and losses using a crypto tax software for the most part in this space right now.
Got it. And yeah, I would always advise that, like, when you're using an exchange, we get a lot of questions, which this is just something that you have to kind of navigate as you're doing your crypto taxes, around whether exchanges will issue tax forms or not. We do have like upcoming US regulation that will require these exchanges to issue tax forms. So in general, just like know that these forms could be coming. It's also another reason to be very like thorough and kind of make sure your crypto taxes are accurate. Um, on the topic of exchanges, Shehan, how is exchange staking taxed? That's a question we're getting a lot about, like ETH staking on Coinbase. I'm curious how that's taxed. Is that supposed to be income? Are you disposing your ETH when you start staking it? Like, what's the gist of staking taxes?
Yeah, I think let me give an example because that will help. So let's say you're staking on Coinbase or any other exchange, and you just receive one reward worth $10. That is considered ordinary income at the time you're receiving that. So you report that, and let's say several weeks later, that reward becomes $15, and then you're selling that reward for $15. So in this case, you would have a $5 worth of capital gain, which you report on the Form 8949 and Schedule D. So generally speaking, just to summarize, if you're earning staking rewards, that's taxable at the time you're receiving it, and when you sell it later, that will result in a capital gain if that coin has appreciated, or a capital loss if that coin has depreciated. Now, going back to our previous example, like Coinbases and other exchanges, in our example, they will not issue a 1099 miscellaneous because the $10 is obviously less than the $600 threshold. However, you're still required to report that on your taxes according to tax rules.
Gotcha. Yeah. And then just a quick note on how you would actually do all this tracking. Again, the CoinTracker product built really well for staking. And so what you will see when you add your, let's say, Coinbase account, and you've done staking on Coinbase, like you could stake ETH, you could stake Solana, whatever it might be, we'll be able to track those events. So every time you do a staking transaction, we'll be able to mark that and understand that. Anytime you're getting staking rewards, we'll make sure that that flows automatically into your income in your reports. And then the other good thing is when you unstake your assets, you don't want your cost basis to get reset at that time of that transaction. And so, for example, when you're doing exchange staking, we'll make sure that cost basis tracks as well. So in general, like staking transactions, especially if when you're doing it on an exchange, sometimes it can be tricky to track the income and all of that stuff easily. And so doing that on a crypto tax software is one solution there. The second thing I would recommend for if you're, let's say you might be staking actually on chain, so you might be like a validator on Ethereum network, or you might be staking through a protocol like Lido. CoinTracker in the past, like let's say like 3-6 months, with our CoinTracker 2.0 launch, has really up-leveled our staking support on chain as well. And all of those rules that Shehan mentioned around like income and like kind of the cost basis and everything are still applicable. We're just now a lot better at tracking those events when they happen on chain as well. So CoinTracker should have you covered if you're using exchange or if you're using blockchains for staking. But if anything, if you do have questions, um, feel free to shoot them over. Um, awesome. We do have some now maybe more product related questions in general. One question we've gotten is around wrapping. Um, like, are transactions like wrapping considered taxable on CoinTracker? And what if I don't actually want them to be taxable? Maybe Shehan, if you want to provide like what the general guidance here is around the tax rules, and then I can share more about how we handle it as a product.
Yeah, so IRS has not issued any direct guidance on, taxation related to wrapping and unwrapping transactions. That said, conservatively speaking, most of these wrapping transactions can lead to taxable event, because essentially IRS could argue that, hey, you're converting a coin to another form of coin, and as a result, that triggers a taxable event. So, conservatively speaking, I would treat it as a taxable event. But I've also seen some taxpayers take the other approach. They think that it is not a taxable event, therefore, they don't treat it as a taxable event. So, Nishita, maybe you can share like how CoinTracker is helping users to pick the choice that they like.
Definitely. So as Sham mentioned, like a conservative approach would be to treat it as taxable. So what does that mean? So if you're, let's say you're going from ETH to wrapped ETH, that would be considered like a normal swap or a trade, and you would actually be like having a disposition or a disposal, potential gain or loss on that ETH. So CoinTracker by default does treat those through the conservative. We try to take the conservative angle in most of these situations so that you don't. So for by default, you will end up with that on the product. However, in the past few months, we've also launched a feature called what we called like optional like settings around these tax treatments. So if you were actually to go to the CoinTracker settings page, you can actually decide to treat some of these things potentially as less conservative, assuming that's what you would like. And I would always, always, always consult with your tax advisor before you make those decisions. But you can have that flexibility on CoinTracker today, which one of those tools we have around that optional treatment is around wrapping. So you could go ahead and in the tax setting, decide if you'd like to treat wrapping as non-taxable. Again, caveating all of that by saying I would definitely encourage you to check with your tax advisor before you make some of those calls. All right, so maybe shifting a little bit more again to the CoinTracker product. We get some questions, and I can take this one, but we do get some questions around on-chain activity that doesn't seem to be supported by CoinTracker. Maybe there's a blockchain you're using that we don't have an automatic integration for. Maybe this is probably a two-part question. Like one, how do I get my taxes done? And then two, how do I request an integration? So this is a great question, and we do get this a lot. And of course, there are tons of blockchains out there, and we do try to support as many as we can. But there may be a case where there's a blockchain or a wallet or something like that that we don't support. So the first thing I would check if maybe you could check in with support. You can check on what we call our CANI, which is our like board of all the support requests or product requests we're getting. So definitely try checking there if it's kind of on the roadmap or if there's already an item there for CoinTracker. In the event that that's not there, you can also request an integration there. You can also reach out to me. You can DM me if you have like ideas for integrations. Feel free to DM me. I'm happy to take those requests and we can consider them across all of the other integrations we're building. In general, though, if you don't have an integration supported on CoinTracker, what you can do is you can always download a CSV of your transactions. There are tools, Stake Tax is one that lets you like quickly download a CSV of transactions, and it'll be auto formatted into the CoinTracker format. I can share that with anyone if you're interested. But you can download basically a CSV of your transactions and upload that to CoinTracker. Basically, for anything that feels unsupported or you need to do extra kind of transactions uploading, you can use the CSV approach on CoinTracker. We are always though looking again to add more integrations. So feel free to reach out to us and we'll try to support it in the future if it's not already there. Cool. We also do get some questions around errors and what show up as needs review on the product. So I did want to quickly touch on those. And then after that, I actually will open the floor up if you do have any questions. But there are some users who get kind of confused about some of the needs review errors that they're seeing on their transactions. And so I'll just quickly go over two of the common errors and how to potentially fix them. So the first error that users often write in about is the insufficient quantity error. And so I just really quickly wanted to touch on that. And then the other one is around missing price errors. So for the needs review, where you need to review a transaction for insufficient quantity, what you basically want to do is check the balances of those assets in that wallet. So insufficient quantity basically means that you might be sending or disposing or selling tokens that we don't have records of you actually receiving. So what you'll want to do is basically review your transaction history for that wallet for that specific token. So let's say I have an insufficient quantity needs review on an ETH transaction. I'm going to want to check all of the different ETH transactions in that wallet to see and make sure things are lining up. Usually it's because of a missing transaction. And you can add manual transactions on CoinTracker to fill those gaps, or you could potentially try syncing your wallet again. It might just be that some of those transactions haven't been synced recently. The other common needs review transaction type is around missing prices. This can be because basically CoinTracker is talking to lots of different providers for token prices. So we're talking to like people like CoinMarketCap or CoinGecko and getting the prices of tokens. There may be situations, especially newer tokens, especially DeFi tokens, where those providers themselves don't have prices. And so in that event, we may flag something called a missing price needs review. So you can go ahead and manually input the price there. In the error, you'll see a way to manually input the price. Or if you're okay with the conservative treatment, you can also treat it as a zero price or a zero cost basis. And yeah, so those are the two common needs review. I'm happy to answer more questions around that. But we are now going to open up the floor. If you do have any questions that you'd want to ask live, feel free to, I think you can request to, or like raise your hand or something like that, and I'll be able to help you unmute and you can ask your question. Awesome. I think, Alex, you may have had a requested to speak. Let me know if you have any questions. We're happy to answer them.
Yes, hi. Can you hear me okay?
Yes, we can.
Great, thank you. And Shehan, thank you for everything you do on Twitter. You provide very valuable information, and I'm grateful for that. My question is, if I buy, let's say, $100 of Bitcoin on Coinbase 3 years ago, and I moved it to self custody, but then I moved it back to Coinbase to sell it when it was worth 200, wouldn't Coinbase use my cost basis of $100 and give me a cost basis of 100 when I go pay taxes? Or is that not yet available like Robinhood does on Coinbase?
Yeah, thanks, Alex. I actually tweeted about this like today in the morning. The answer is like you will have to either enter that cost basis and the date purchase inside Coinbase's tax center. I think they have the capability to ingest your information. So as long as you know your cost basis or date purchased for that original Bitcoin on your personal record. So if you're using something like CoinTracker, you can find that over there as well. So as long as you enter those cost basis and data acquired inside Coinbase's tax center, then you will see the right amount of gain or loss inside Coinbase. Otherwise you won't see the cost basis in this case.
Yeah,
Okay.
maybe let me quickly add one thing there. So basically, like if you transferred it out and then transferred it back in, Coinbase doesn't have a way to automatically know that that was still the same Bitcoin you had acquired on Coinbase earlier. So you would have to manually go and input that into Coinbase. They would not automatically know that, if that's helpful.
Understood. Yeah. Yeah. It seems that they should just use the coins that I purchased and never sold, and now I'm selling. So why not use that? But no, you're right, because it would have different date stamps. So that kind of makes sense. Thank you.
Awesome. No, thank you for your question. It's a very, very common question. So I appreciate you asking. If there's anyone else who has questions, feel free to request to speak, and we're happy to hear your questions. And let me also monitor the thread if there's any new questions there. Cool. We do actually have a question in the thread. How is mining? How do we track mining in terms of taxes? What are the tax treatments for mining? And then there's a second part to the question. Some of those transactions may not be appearing or supported by CoinTracker. How do we go ahead and track those? So maybe Shehan, do you want to take the first part of that question?
Yeah, so mining income is taxed at the time you receive the mining rewards based on the market value of those coins. So that's taxed as ordinary income. And when you sell those mining rewards later, then the difference between the sales price and your cost basis, that's going to be considered capital gain or capital loss. Basically the same as staking. Yeah, Nishita, feel free to share
Yeah.
how CoinTracker, yeah.
Awesome. So from the CoinTracker perspective, if you're receiving mining rewards and they are not showing up on CoinTracker, there's a couple things you can do. One is make sure that the integration has been synced recently. You could go to the wallets page on CoinTracker and just hit sync on the relevant wallet and make sure that those transactions are coming in. The second thing you could do is also, again, try to upload a CSV of those missing transactions. And then we can basically add it to your wallet, and you can see those mining rewards come in there. And if that still doesn't work, then feel free to reach out you can DM me, and then I can try to help support you as well. But in general, our integrations should support sort of the staking and mining rewards coming in. But if for some reason they're not showing up, feel free to reach out or try adding them manually via a CSV or adding them manually just on the product itself. Awesome. Maybe a question for Shehan. Are there any sort of exciting product updates that we've released that you're particularly, as a expert in crypto taxes, that you've been excited about over the past few months?
Yeah, I think I'm most excited about the tax lots feature. So if you go to the performance page, you can see like each lot of crypto that you purchase with the date, the corresponding gains and losses. So this kind of allows me to kind of visualize, okay, like, the lots that I purchased like several years ago, they have gained X amount of appreciation. The lots that I purchased recently, they have not gained so much appreciation, but overall my gains are high, type of thing. So kind of seeing that detail view, I think that is my favorite feature.
Awesome. And what could people do with that information? Like seeing those lots, is that helpful for me, like potentially as I'm deciding to make trades, or how should I use that information?
Yeah, so I mean, ideally, you want to sell the lots for tax purposes. You want to sell the lots where you see like losses, or like the lots where your cost basis is the highest, right? Again, if you just click the high for economy method, like the tool itself kind of takes care of things. So for me, that is the advantage, because I know that, okay, if I were to sell X percentage of my crypto, like my Bitcoin or whatever, I would gain like certain amount of money. However, my tax bill will lower because I am actually disposing of my, most recent lots where I don't have tax gains inbuilt. So that's how I'm using it. But again, worry about it. If you're using the high for economy method, like these type of things kind of get taken care of automatically behind the scenes.
Awesome. Yeah. Seeing your lots is always really helpful. Like one of the things that is when I first started using crypto, I never really thought that much about the tax stuff, but seeing kind of your lots on CoinTracker, you can kind of keep an eye on like, okay, what are my bases? What wallets are these assets in, and how can I kind of like make smart decisions around taxes? Because obviously, like you may be making gains without even knowing, and like it's helpful to have that view even as you're making your activity. And then of course there's also opportunities to tax loss harvest as well. um, awesome, thank you, Shehan, for answering that. Again, I'll pause here if anyone does have questions. If you want to request to speak, happy to answer some live questions too.
I have one more question, if you don't mind.
Of course, please.
Thank you. Shehan, I received my Ethereum from Celsius after the bankruptcy, and I think you briefly touched on it. When I go to sell next month some Ethereum and it's up 20%, my cost basis would be the price of when I received it into my PayPal, or what Celsius decided what it was when they gave it to me.
Yeah, again, complicated topic. I actually wrote like an in-depth post about this as well, Alex. But to give you a simple answer, whatever the new Ethereum that you received gets the old cost basis and the data acquired of your original Ethereum or whatever the coin that you had at the platform when it went bankrupt. So basically, like you get to transfer that information to the newly received coin.
Okay, and I guess partly it also depends on what I receive from PayPal, what kind of 1099. If I do sell a bunch of that Ethereum, I guess I'll take that into consideration as to what they provide me in the form of a 1099, I assume.
Um, so if you're selling that Ethereum on PayPal, they would issue like a 1099 for the sales price, but they would not know your cost basis. So I'm not sure how that's gonna. They're most likely they're gonna have the cost basis as zero on the 1099s if you were to sell that Ethereum on PayPal.
Okay, got it. And now I'll have to determine what that cost basis is. And I think I've heard from other people that possibly it's the amount of at the time of bankruptcy, but then I might have a capital loss because I got less than when I had. So you're right, it gets a little complicated. But thank you, I appreciate it.
Yeah, no worries.
Cool. We have a question in the thread about the wash sale rule. So it seems like the IRS wash sale rule doesn't apply right now to crypto, and it kind of lets us harvest losses pretty easily. I'm curious, Shehan. Do you think that there is a chance the IRS could take that away? That rule just seems too good to be true.
So our President Biden issued his 2025 budget a couple of days ago. In the budget proposal, they're trying to close this loophole. Basically, they're trying to subject crypto to wash sale rule as well. This is not the first time we see this. This was inside the budget proposals for the past, I would say, a couple of years as well. So the topic is definitely in the talks. We don't know if it's going to go through or not, but I want to say it's a matter of when versus if. Um, so yeah, people are looking into closing that wash sale loophole for crypto.
Awesome. Thank you. We have a couple more questions in the thread that we can go through. Um, so it looks like CoinTracker transactions for mining. We had that question earlier about mining. It looks like those are paying out like very, very often, and it's basically recording tens of thousands of transactions per year. I'll take this question, but just in general, how does our pricing model work with all of these transactions that are coming in with staking? So in general, for those, we do have a feature this year where we're actually excluding staking transactions from your transaction count. So when you are purchasing your plan, those staking transactions will be excluded. It's a good point that mining is also potentially in that situation where you're getting tons of different transactions. And you might be paid out all the time. Let me follow up with from our team. So if you want to DM me that this question, it's a great question. Let me follow up to see what we can do about the mining transactions, which could end up contributing to thousands of transactions in your account. In general, we want you to pay for transactions only that you have sort of actively done, and not just all these like random spam airdrops or random staking rewards that you're getting every day that are mostly automated and not really in your control. We really just like want to have a very fair pricing model around this. So feel free to reach out to me, and I'll also try to see what we can do about those mining transactions. It's a really great question. Cool. So we have one question around just like past tax returns as well. Like, can CoinTracker or these tools help out with maybe past years? And in general, when you add your wallets to CoinTracker and your exchanges to CoinTracker, we're going to sync all of the transactions. So we will basically sync from the first transaction you did, whether that was like this year, whether it was last year, whether it was like 5 years ago. We're going to sync all of those transactions. So basically with CoinTracker, you'll have a full history of your transactions. And it's a great question on like, what about past tax returns? Maybe you didn't file crypto earlier and you want to go ahead and file that now. Maybe you want to amend your returns or whatever it might be. When you buy a plan for CoinTracker today, you're going to get all the past tax years. So if you buy a 2023 plan, right, if you pay for that subscription, you'll get access to tax reports from previous years as well. So you should be all set. And CoinTracker should let you kind of do your taxes for any year. And again, like once you've added those wallets, we'll also be tracking future transactions. So as soon as you've added let's say your on-chain ETH wallet, we'll keep monitoring it. If you've added your Coinbase wallet, we'll keep monitoring that. And so you'll also be ready and set for taxes come next year with all of your transactions in place. So it should be a holistic solution, but if you run into any issues or anything like that, feel free to reach out. Awesome. Another question in the thread is, if assets are originating outside the US and they're transferred to a Coinbase wallet, can CoinTracker handle them correctly according to tax laws? It's a great question. So in general, we'll handle like the tax laws based on the specific country that you're in. So let's say you're in the United States, we're going to respect the rules of the United States, and you can change the country setting in the CoinTracker settings page. If you did have assets that originated elsewhere, there's a couple things you'll want to do. So first, you'll want to check if we support an exchange integration. We do support exchange integrations via what are called APIs for many different exchanges outside the United States as well. So I would first check that, and if so, add those exchanges via the API. If for some reason we don't, you can also try to get, again, a transaction history CSV from that exchange and upload that to CoinTracker. And then we'll be able to track your transactions from it as well. In general, like your first goal will be to try to get all of those transactions into CoinTracker. And then after you've done that, we run this basically like our software basically runs what we call like transfer matching. So let's say you transferred an asset from an exchange to your Coinbase wallet. We'll try to pick up those transactions and match them so that they show up as a transfer on your account. So you should be able to, as long as you can get those transactions into CoinTracker either via an API or via a CSV, we should be able to detect those transfers and make sure your cost basis is just simply transferring over in those transactions. Awesome. If there's any other questions, we'll pause again here to leave any live questions open for the audience. Or feel free to add them in the thread. We're watching that as well. All right. I actually do have one question that came in separately around sort of like Uniswap and kind of DeFi transactions. Curious, Shehan, what is sort of the treatment you would expect around like adding tokens to a liquidity pool? What is the tax guidance there?
Yeah, this kind of goes back to the wrapping and unwrapping discussion. IRS hasn't issued any direct guidance on this matter yet, but conservatively speaking, you could argue that whenever you contribute to a liquidity pool, and if you're getting back some type of other token, IRS could come and say that is a taxable sale of that token to that new token. So, again, that if that's the case, there's a taxable when you're entering the pool. There's a taxable even at the time you're exiting the pool because again you're going from one coin to another. That said, I've also seen taxpayers taking the other approach. They think the pool token is just a representation of their stake, therefore it's not taxable. So those are the two approaches. But I would recommend as a CPA to follow the conservative approach until the IRS says otherwise.
Awesome. Got it. And building off of that on the CoinTracker product itself, we will, like Shan mentioned, take the conservative approach. So if you do add assets to a liquidity pool, and you'll often receive what we call like an LP token back in return, we will treat that as conservative. We'll treat that conservatively as taxable. And the cool thing is, when you do add those wallets to CoinTracker that have those liquidity pool transactions, you should see them automatically marked as either adding liquidity, removing liquidity, receiving other income, because you might receive some rewards. So those should be automatically categorized. We do support kind of the top 100 dApps across the EVM ecosystem. If for any reason there's a transaction that doesn't seem to be accurately like categorized, you can actually do that manually as well. And once you label something as add liquidity or remove liquidity, we'll actually process the accounting correctly as well. So in general, liquidity pool transactions should be solved automatically on CoinTracker, assuming they're categorized correctly. And then there is also that question that Shehan mentioned about some ambiguity around the tax guidance. Again, we do have optionality settings in the tax settings pages on CoinTracker, so you can decide to treat something as potentially not as conservatively, maybe not taxably. But with all of that, consult your tax advisor for full clarity and full just like accuracy as well. Awesome. We do have a request. I'm going to go ahead and Donald, I am going to approve your speaker request. If you have a question, feel free to chime in. I think it's connecting. Donald, did the speaker request come through?
No, I don't see the speaker request anymore.
Okay. All right. All right. As Donald is getting connected, we do have potentially one other question, and maybe Shehan, you can try to answer this from what your perspective is, and then I can see what we are able to do on the product. We get a lot of questions around NFT pricing. Basically, people are confused since NFTs don't have like prices available at all times. How should users think about their taxes for NFTs, especially if like they're receiving NFTs and there's no price available? Like, what is the guidance here, and what can users do?
Yeah, I mean, if you're receiving an NFT and if there's, no readily available price for it, then there's no income for you to recognize because, again, this is assuming there's absolutely no price for that NFT. So, but if that NFT has a price, like for example, if you're receiving some type of, Bored Ape Yacht or something like that, and in that case, you could actually figure out the pricing. And in that case, that would trigger a taxable event. Receiving that NFT as a result of like getting paid or like.
Shan, I think you cut out in the last minute. Could you repeat that?
Yeah, I was going to say that if the NFT is like like a common like art piece or something like a piece of like a boarded yacht club or something like that, then you would know the pricing, the value of that at the time you're receiving it, and in that case you would have income equivalent to that time you're receiving that.
Got it. Awesome. And yeah, so building on that, and in terms of like how these products like crypto tax softwares like CoinTracker work. So the NFT stuff is always, it's a bit of a crazy journey when you're trying to do your NFT taxes. So I understand sort of the complexity. I have NFTs myself. In CoinTracker, what you will see is if there are assets on the other side. So let's say you're buying an NFT for ETH or USDC or something like that. You will actually see that transaction automatically reconciled. We'll pull the price from the other side of the transaction for those NFTs. And so those types of situations should be good to go. Or let's say you've minted something and you just paid a small fee, like a gas fee or something to mint it. We'll use that price for that NFT at that time. Now things get trickier when you're just receiving NFTs that don't have prices, and maybe you are dropped an NFT or something like that. In that situation, conservatively, we will assume a zero price. But if you have either gotten something appraised or you have like sort of an estimate that you want to use for that NFT, you can go ahead and add a custom cost basis using kind of tools on CoinTracker, and we'll use that instead. So in general, basically TLDR is we'll track those transactions if they involve ETH or USDC or other like tokens. We'll track those cost bases using the other side. If there is no other kind of crypto that we can use to determine the price, then we'll use zero by default conservatively, and you can go ahead and manually enter. Awesome. I think, Donald, maybe there was, I'm not sure if others are having issues with speaking. If you want to try the speaker request again, there might be some spaces issue, which we'll try to resolve and see if it works this time. So feel free to raise your hand or request to speak, and we'll try to get you on. All right. If not, we just have maybe 1 or 2 more minutes left. And so maybe, Shehan, random fun question, not about taxes. In general, in crypto, what is something you're really excited for this year? It could be taxes if that's the only thing you're excited about, but in crypto broadly.
I think we are at an all-time high. I think last time, like generally, like when Bitcoin like achieves some type of all-time high, like it doubles in value. So I don't know. I'm excited to see 140K Bitcoin before the end of the year if that
Oh my
happens.
gosh,
So
is that
yeah.
your official price prediction? Not tax advice. But that's awesome. Maybe I can quickly go, and then we actually I see a request coming in. So let's do that, and then I'll answer my excitement. I do have a lot I'm excited about in crypto. And then Donald, also, if you are back on, if you can try to request to speak again, we can try to get you in. I think Spaces is having some issues. But we just bumped someone to speaker. Are you able to talk? Could you try talking?
Yes, hello?
Oh, yes, we can hear you. Perfect.
Hi. Quick question. I know that right now exchanges, they will send the IRS 1099 miscellaneous if that is required. In the future, I know 2025, they're proposing the exchanges actually send the IRS the actual gains and losses of that person. My question, I guess, is that, the cost basis is going to be off because the exchanges can't read data outside of their own platform. As far as CoinTracker keeping track of these things, it's much more accurate with cost bases and transfers and whatnot. How is that going to work in the future if that plan comes to be with that? I know that regulatory stuff is really up in the air, but that was a concern I had.
Yeah, good question. I think we are closely monitoring the space. There's also an opportunity for CoinTracker and other crypto tax aggregators to kind of work with exchanges to share that cost-based information with those exchanges, of course, with the consent of the user. So that way, exchanges can produce more complete and accurate 1099s. So that's something that we are exploring. We're also working with the Treasury and the IRS to come up with more sensible way of handling crypto taxes as well. So yeah, those discussions are in the works. We are trying to figure out a crypto tax framework that is easy for regular users. So yeah, stay tuned for updates on that.
Okay, thank you.
Awesome. We're gonna try one more time to get Donald live. Sorry, I don't know what's going on with the spaces, but I can't hear you. If you want to try speaking though. Or if not, I did DM you, Donald. If you want to write your question there, we can try to just read it. That might also work. Oh no, I don't think it worked. Sorry about that. Feel free to DM me. I did reach out, placed your question there, and we'll definitely try to get to it. If not, we are going to go ahead and end now. I'll quickly end on what I'm most excited for, and then we can close it out. And Donald, I'll keep an eye out for your question. I really want to get it answered. But what I'm most excited about is every bull run seems to have some sort of new thing. So we had DeFi back in 2020, 2021, we had NFTs. I'm really excited. What is sort of the new development in crypto that's going to come with this cycle? That's what I'm really pumped about. So if you have any ideas or guesses on what that might be, feel free to drop them in the chat or the thread. And we thank you all so much for joining. We're really excited, again, to answer all of your questions. Feel free to reach out, post, and tag us if you have more questions, or you can DM, and we'll try to get through as many as we can. And sorry for the technical difficulties on Space. Hopefully they'll be resolved in our next one. Thank you all. And thanks, Shehan, also for answering so many questions.
Thank you.